All right, everyone. Thank you for joining us again in this another session of tutorials with Triple A Professional Accounting Institute. We are online to make lectures seamless for everyone that want to run through any examinations as it comes to or fall within the purviews of accounting, either financial accounting, financial reporting, corporate reporting, as well as other management courses. So please subscribe to our videos, you know, like our channels, subscribe to our channels, and then always remember to click on that notification button to always get videos from AAA Professional Institute. Today we'll be looking at this one very important standard in financial accounting or financial reporting, as it were, and that is IFRS 16, and that talks about lease. So quickly we run through the course outline. What we're going to be considering under this IFRS 16 is important to just run through them so that you can have basic understanding before we go into the accounting treatment. So we have definitions, the scope. The definition talks about what it is all about. The scope talks about the coverage, where it can be used. The commencement, how do you recognize when a lease agreement begins, as well as determining the lease existence. If actually there is a lease existence, what and what do you do? So please join me as I run you through this very wonderful standard. IFRS 16, the definition. By definition, um, IFRS 16 is a contract that will always give rise to the use of an underlying asset for a period of time in exchange for a consideration. So it is the right to use an underlying asset for a period of time in exchange for consideration. Please be taking note as I am also taking you through this lecture. In exchange for consideration, meaning that for you to call it a lease, there must be the right to use, there must be an underlying asset, and there must be a period of time, and there must be an exchange for consideration, meaning the payment that you are making on it. So the right to use an underlying asset for a period of time in exchange for a consideration. That is the definition of a lease. So without these components, the right to use, the underlying asset, a period of time, exchange for a consideration, it is not a lease. It is not a lease contract. That is that for that. So just understand this basic. Once you see it like that, you once you understand it like this, you will be able to make use of many information is given to you, whether you are writing an exam or you are preparing a report. Once these items are there, you should know that there is a lease contract. And so the scope, what does it cover? The scope of lease covers the scope now covers the lease in mineral oil and gas industry, lease of mineral oil and gas. It covers that. For instance, all these oil wells that have been leased out, this oil producing areas. They lease out the well. Some people they lease out their equipment. Some people they lease out the offices. Some people they lease out the space there. So all of those ones it covers it. It also covers lease of biological assets. Biological asset. It covers lease of biological assets. You can see. For instance, some people will say they are giving you a farmland. When they are giving you a farmland for a use for a period of time, that is a lease as it were. So it covers that. It also covers, for instance, now somebody may say is giving you a noble farm to use for a period of time. You understand? Or some people will say, okay, I'm leasing out my what is it called now? These elders people, these people that are rearing cow. They will give you cow for you to lease for a period of time and the like. So we also have that of service concession. what we call the service concession. It's important that you know all of this service concession. I give you concession to use my service for a period of time. For instance, those people providing services like I'm trying to remember one now. They just allow you, maybe all these media houses, for instance, like those media houses that will lease out certain aspect of their programs. They will lease it to you for use, and then you pay certain amount of money for a consideration. What about the other of intellectual property? We also have that of intellectual property. The lease of intellectual properties, that is your ideas. You lease it out for some people to use for a period of time. And then what of that of a licensing agreement? Licensing agreement. You lease licensing agreement also has. For instance, you know, they have given Mr. Biggs license to operate a restaurants all over Nigeria. They give them the license, and then they will lease the franchise out to some people for usage over there. So all those leases are the scope of this IFRS16 covers them. Please understand that is that for that. So let's go quickly to the commencement. The commencement. So under the commencement, how do you know when a lease agreement is going to commence? You will know a lease agreement that it will commence, and it will be the earliest commencement. Commencement now. Commencement of the lease will be the earliest of the date, earliest of date of agreement, earliest of date of agreement, or that of that lease payment, when lease payment is made, when lease payment is made. That is to say, the earliest of when agreement is made or when lease payment is paid. You understand? So that is when you will say a lease agreement has begun. What I'm saying is this now. How do you know when a lease agreement has commenced? Now let's assume that I enter a contract with Mr. Biggs. Now they should give me their franchise, their name for use for 2 years. You understand now? Now we enter that agreement on, let's say, 3rd of February 2024. But because I wanted to start earlier, I now pay them my lease payment, the first lease payment in advance. I'm supposed to pay at the end of the year, but I paid in advance. I now paid on January the 30th. You understand now? So if I pay them 30th of January, that is the lease payment, January, and then we enter agreement on the 3rd of February. So the earliest of this date, which one? Which is the 3rd of January is the earliest. That is the one that I will choose as when the lease contract actually began. It's as simple as that. You understand now? So let's quickly go on and we look at how do you determine that there is an existence of a lease. How do you determine that there is an existence of a lease? I've told you before, you determine that there is an existence of a lease when there is a right to use the asset. When there is a right for you to use the asset, and this right is that you will use this asset. This right is that you will use the underlying assets for a period of time, for a consideration. And that consideration is what we know as the lease payment. So please understand that that is how to determine all of these put together. So please, these are the bases that I'm trying to formulate right now. We move quickly to what we call the accounting for lease, and then we look at under that we look at the recognition, we look at the measurement, presentation, and disclosure. Please, like I said, like this video, and then the next session we look at this accounting treatment of this lease together.